Welcome back to the Live Your Best Life podcast, where we explore the people, experiences, and philosophies shaping success and meaning in today's world. Today, Emilio Torres, mortgage broker with 365 Lending, joins me to talk about how he got started in the business, what he sees in the housing market today, and some important do's and don'ts for anyone thinking about buying or selling their home. It's a practical conversation filled with real-world perspective and valuable insight. If real estate is on your radar, this conversation matters. Hello, everyone. Welcome back to another Live Your Best Life podcast. Today, we have Emilio Torres with us, and we're going to talk about lending. We're going to talk about the market. If you're in the housing market today, we're going to talk about different types of loans maybe, and get to know a lot about the market in general, whether today's a good time to buy or sell or finance or refinance. But before we get started, Emilio, I want to welcome you to the show.
Yeah, thanks for having me.
And I also want to get to know a little bit about you. So, and exciting news, I guess, because you're getting married.
Yes, sir.
Got engaged recently. So want to know a little bit about like where you grew up, who you are, kind of how you got into business, stuff like that. So if you don't mind, just let our listeners know a little bit about you on a personal level.
Yeah, absolutely. So I'm 25. I've ran my company now for about 5 years. I grew up right down the street in Macomb.
Okay.
So I'm very familiar with the area. And I got two little pups, two Cocker Spaniels, and getting married at the beginning of the next year.
What's the name of the pups?
They're named after like performance cars. So you have Rari, the Ferrari, and then Rover, which is Range Rover.
Nice,
Yes,
nice.
sir. And they're actually they're not brothers, but Rover's sister had Rari, so they're in the same bloodline.
Now, who came up with the names?
So Rover was my fiance Taylor's dog.
Okay.
Right when we got into the relationship. So that was hers. And then I had to stay on brand. So her childhood dog was Bentley and then Rover. So I had to name the dog of something in the car world.
Sure.
And he's all black. So I got him a red collar with a little Ferrari logo. And I figured that's my little Rari.
Nice. How old are the pups?
5 and 3.
Okay.
Yep.
And you guys recently got engaged.
And New Year's. Yeah.
And how did you do that? New Year's Eve party or what?
No, we have a little tradition where we get like all the cousins and everybody. We go up north for New Year's instead of jumping up and down. We go relax outdoors, nice lake view. And I felt like that would just be on brand and wouldn't be like, oh my God, he's doing it now, So we went up there, we relaxed. I didn't do it on New Year's night because I knew that kind of she'd be expecting it. So I let it go. It kind of made everything a little bit like stale, because it was like, when's this happening? Why didn't he do it? Is it even happening? And then I waited and I did it like 2 days later. And it was as much of a surprise as I can make it.
I bet, especially if someone's thinking about it's coming on either New Year's Eve or New Year's.
Oh, yeah. I mean,
nice.
She's got pictures of it, just holding up. She's taking pictures to send it to her friends every day, like, not yet. But
well, I know. And some people listening to the show, probably I should have even mentioned this earlier, but you are related to two of the people that work here at Swag, which is Christina and Emily. Mm-hmm. How are you guys related?
So their mom, Melissa, is my dad's sister.
Okay.
Yep. And then growing up, as we got into our careers and like started to move forward, we actually moved in with Emily and Christina. So they're my cousins, but they're more like my sisters.
I was going to say that's how they introduce you as well.
Yeah.
That you're their brother.
100%.
Well, and I'm sure you could tell us a lot of stories about Christina and Emily, but that'll be for another podcast.
Yes, sir.
Because a lot of our client family listening to this would probably like to know the good and the bad things about those two sisters for sure.
100%. There's more good than the bad.
Well, it's pretty impressive. So you said you were 25.
Yes.
So that means you got into business at 20.
I opened the business at 20. I got in the business at 18.
Okay. So got into business at 18, became an owner at 20. So that's pretty impressive at such a young age.
Well, I was never going to be in sales. I didn't want anything to do with sales. My dad was a salesman growing up, and we were in that where 1 month it was get anything you wanted from the grocery store, and the next month was put that gum down.
Sure.
So I was attracted to like union labor. Quickest way to middle class. Always consistent, good retirement. And I was going into it, and COVID was was on the brick, so things were coming up to it, and I was going through all these classes and being delayed, and there was year-long delays before I could start working. And one of my friends who owns a life insurance agency was like, Emilio, you're decent looking guy, you know how to talk. Like, what are you doing? Go sell something. And he connected me to this mortgage company, and I sat down and I felt like I was at home. It was so quick to learn, and I climbed the ladder really quickly there.
At the mortgage company?
Yeah.
So what were you trying to get into prior?
I was trying to be a lineman electrician.
Okay.
Yeah. They make great
They
money.
do. They make a lot of good money.
100%.
Yeah. So big difference in careers though.
Huge difference.
And what made you want to be an owner though, instead of just working for someone?
So the company that I was at previously, I felt they were a bit greedy, and they had a lot of people. They weren't training you how to be a true mortgage loan originator. They had things sectioned off, and they only taught you 15% of the job. So there was 10 people that worked in the file, and each person knew 10% of what you needed to do. So I felt they were kind of keeping me stupid, if you would. And I said, dude,
on purpose,
100%. Yeah. They didn't want me to grow. And I realized if we're doing all these bad things to people and we're charging all of this funds and we're lying and, we're getting people to the closing table in unconventional ways, if I just did it the right way, how can the business fail? So I left that company. I started up out of a conference room. Taylor's dad, my fiance, owns a real estate brokerage. He has for 30 years. So we started up in his conference room, and it was a journey, but we made it.
That's pretty unique.
Yeah.
Especially how you started. And it's probably very similar to a lot of companies, startup companies, right?
Yeah.
Myself started off basically in the basement of my house.
Yeah.
But very similar, started working for one of the big companies out there and realized man, we could add so much more value. We could be different, instead of just managing money, we could help them with their income, investments, taxes, healthcare, estate planning,
right?
Where the norm in this business is just focusing on one area, and that's investment planning. Similar to you, said, wait a minute, that's not good enough, right?
Yeah.
There's so much more that we could provide and help our clients out with. And that's the same reason why we're sitting here today in our building, is because we could see the bigger picture and how we could really help someone live their best life in the long run.
Oh, yeah.
So it's kind of unique of how much more value you could add as a business owner doing the things the right way, the way you want to do it.
Oh, 100%. I definitely thought it was going to be a lot faster. Growing the company, I came out, I was not humble by any means. I was young, I was cocky, I was making very good money for a 19-year-old. And I figured this is going to be so easy. I'm going to just grow so big. I'm going to be a multimillionaire, and it's going to be barely any work. I'm not going to have to work as much, And I remember once I stepped into my own office and I started to inquire and started to open up the business, how many things I didn't know because of how, stupid they were keeping me, essentially. So I opened up this whole world that, I only knew 10% of. And it was a fight to figure everything out. And, it was very humbling, if you would. It sat me down and I was like, man, there's so much more to mortgages than just an interest rate and a payment.
And a business owner, because now you have to deal with marketing the business, paying the bills, structuring the business the way you want it, whether you're hiring or not. So many people want to be a business owner until they become a business owner. And then they're like, man, if I could go back to just being, an employee or just, back into sales and not really managing it, because it becomes a hassle. It's, for some people.
Yeah. Well, for me, I do the right thing. I treat people like family, and then I don't have to look over my shoulder. I sleep like a baby at night, and it's a lot easier when you're doing the right thing. Things tend to fall in line, and if people respect you and you do right by them, even if you are making an error, they're going to let you recover that error and fix your mistake. So I
think that's key.
100%.
Now, tell us a little bit about 365 Lending. I know how it came to be, but what sets you guys apart from other lenders out there?
So we're more of a boutique brokerage, and we go business to business. So instead of going for the client that needs a refinance or a purchase, we go directly to the agents that are selling the houses and referring the clients, right? So I'm a small company and I'm very malleable, right? So I can go to a team and see, what are you guys doing a lot of, right? Like, what is your market? How, who are you guys closing? Who's 80% of your guys' people that you're bringing to the closing table? And then I can go find programs and lenders and people that fit them well. So I'd say my ability to mold and fit into your business is probably what separates me the most. And then overall, just I'm not greedy. I run a very low margin, so I don't really have to fight for my business. I know I'm priced right.
Nice.
Yeah.
Now, if I heard you right, I want to make sure.
Yeah.
So you're kind of going to the realtors themselves.
Yeah.
And then saying, this is what we can offer.
Yeah.
Or what are your clients looking for? And then that's when you guys take back over.
Precisely. Yep. I go in, I sit down, I get a pulse of their business. I go into their CRM and I understand who their ideal client is, and their ideal client becomes my ideal client. Right.
Yep.
So anything that there's a million different ways to get a loan. There's so many different, I operate under the saying, if there's a will, there's a way, right? Mm-hmm. So there's a million ways to do it. And a lot of them come down to an opinion, because there's a reason why there's a million loans. Everyone fits in a bracket of it,
Yeah. What are some of the problems that you see out there that the typical lenders dealing with, maybe that you guys are not?
I'd say, like, for me, you get to deal with the boss, right? When I'm going through and I'm going through your documents, I know everything. I know my business really well, right? For other people that may be getting pre-approved, say, they sit down with somebody who might be their first year in business that, are trying to make a name for themselves, but they don't understand the paperwork. And they might be telling you, yeah, you're denied, or we don't have the income here, but they don't know how to read the tax return. So they don't know how to prove the income or what documentation to get it. So I'd say one of the biggest problems that we don't have that a lot of other places have is telling the client wrong, just unfortunately, and you control the narrative. When people come to you and say, hey, I need your help, and then you tell them the wrong thing, you can leave a lot of people disappointed. They go home, they second think their life. Oh my God, I thought I was doing a lot better. What's wrong? But to wrap it up, that's what I think is the biggest problem from company to company is just lack of experience.
So lack of experience, obviously, I think because you know what you're doing, you've been doing this for a while. They're speaking to the head person. Yeah. So they have the confidence and clarity that things are going to get done, and probably getting done quicker because that person who's only been in the business maybe for 6 months or a year, maybe slow on the paperwork, not understanding some of the issues or the problems that could arise. So you're able to get that done a lot faster. And like you said as well, probably don't need, as some of these big mortgage companies, to just pump out loan after loan after loan because of so much expense. With the company itself. You're able to take on the right person, get them a better potentially a better rate, and get things done quicker.
Well, you have to imagine with these big mortgage companies, there is 100 people calling to try to get business all day, and say each one of them pull 2 credit reports a day. That's 200 credit reports, and they're at an average cost of like $100 right now. Think about the overhead that you could be experiencing in one of those big companies, and that's just on credit pulls, right? You're not talking a lot of leads. Overhead for sure. Yeah, there's a lot of stuff, and I don't do that. If I'm pulling your credit, that means we're doing a deal, right? Okay. So that's a difference.
So besides working with these realtors, and probably are you doing both, whether it's business loans as well as personal loans for houses?
So, I mean, a personal loan is I don't do personal loans, if you would. I do residential.
That's what I meant to say. Yeah. Not personal, but residential.
That's correct. And for the record, yes. So yes, residential, I'd say, is going to be 75% of my business. Okay. And even residential in the investment space, a lot of people will buy, 1 to 4 units as investments. So residential for your primary, residential for investment, and then I'd say my other 25% of the business is the commercial. So, whether it's apartment buildings, restaurants, strip malls.
Okay. Yeah. Do you prefer one over the other?
I think that there's a lot more emotion in the residential side, and people are a lot happier. Everyone has to have a home and a place to live. Not everybody needs a business, right? So if telling somebody that they can't have something when it's a strip mall is a lot easier.
It's a lot easier. They could go somewhere else and buy something else if they need to.
Go somewhere else, rent it. You don't need the business. Having a family that's requiring you're going through setting everything up, and then they get into the house because you were able to get something for them. I think that scratches the itch for me a little bit more.
It's gratifying.
100%. 100%. They're a lot more grateful.
It's nice to hand those keys over, especially to whether it's a new homeowner or someone who's finally getting their dream home, right?
Yeah. Yeah. I mean, any time that there's a transaction and it's real estate, it's not something where like with insurance, you can close it and then say, oh, I don't like this, or I may have made a mistake and go get it prorated and go to a different company. If we close, you're stuck there, right?
You're there.
So it's every transaction. It means the most, whether it's your first house or it's your last house. It's a step on the ladder to success,
Absolutely. How about any misconceptions out there right now in the business?
I mean, I feel like everybody has been screaming that the rates have been going down since they went up. And I sit there and I scroll on the Facebook or LinkedIn and I see, it seems like every month somebody's new opinion on why the rates are going to come down next month. And they put a lot of people in bad positions, right? Because you might be buying a house in 2020 with your loan officer telling you, 2021, the rates are going to go down. We'll refinance. Don't worry about the payment. And now you're going on your 5th year with that payment, still where it's at with no opportunity to reduce, So
I've heard a lot of that over the last couple of years.
It's, it's illegal. You're not supposed to sell your current, refinance or purchase on the secondary, because a lot of things can happen in between. Somebody can get sick, lose their job, go on, disability, not have the income to support it. So you're not supposed to sell the current transaction on the future transaction that you're going to do. And I feel like that's a major problem that's been going on in our industry because it wraps people up into things that they weren't anticipating. They didn't expect to make this $4,000, $5,000 payment. I thought you told me you were going to get it down to $2,500. Now that people aren't saving for their futures, they come sit down with you guys and you guys are like, Dad, what'd you do? Why'd you do this?
Lock into this? Yeah. Where are rates sitting today, roughly?
About 6.5%.
Isn't that crazy?
Yeah, I mean, I've seen worse.
No, exactly. Yeah, I mean, we could go back plenty of times in history.
I think the average, and I think they've been record keeping since 1973 or 74. I think the average is still over 8%. Yeah. So it's, over the lifetime of it, it's not that bad. It could definitely be worse.
We have those conversations all the time, almost every day in the office. Like someone comes in and says, hey, this is my interest rate. Should I pay the house off or not? Should I take out of my investments to pay the house off? And it always depends. There's a lot of different things, different factors that get thrown in there. But then, they're anticipating where a rate's going to be in the future, which we have no idea.
Yeah.
But those rates were really nice several years ago, 4 or 5 years ago, when they were, I think we locked ours in around 2.75, somewhere on there.
Yeah, I have a 2.25,
Isn't
30-year
nice?
Fixed. Yeah, and never selling it. It's going to stay in the family forever.
And they jacked up so quickly.
Yeah, it was a knee-jerk reaction.
Yeah.
Right. COVID happened. Everyone's scared. People are staying home, and they want to keep the market moving. In my opinion, I don't think they ever should have dropped them that low, but it happened. We're there. So, you have all these low rates and then you get spiked up high and then, your income's not really catching up and the cost of goods are flying off the walls. Right. Yeah. So I have another problem, if you would. I have a bunch of normally well-qualified people, if we were in even, let's say 2018, right, when rates were just at 4.5% and everything wasn't running up the walls, right? These were good qualified people. They were good jobs. They did everything they were supposed to do. And even dual income families, when they come sit down with me and I get to go through, with their car payments and everything, what they can afford, it's like, Emilio, I can't buy a house. That's, I think the biggest problem that I've experienced in the last 4 years is good quality people that I have to tell no because of the price of houses. I mean, the house I grew up in 2002 was $175,000. That house sold for $450 4 years ago, and it's up even higher now.
Where do you think the housing market's going to go?
And what, short term, long term?
Yeah, looking at over the next year, someone's sitting there today thinking, hey, our price is going to adjust over the next year, or should I continue renting, or should I look at purchasing a home? It's
really dependent on your price range, right? Because of what I just told you, a lot of people that are good working people are being pre-approved for less than $300,000. So if you go into your sub 300,000, St. Clair Shores, Warren, it's a dogfight over there because that's what they can qualify for. But if you step up at 500, 600,000, houses aren't selling as fast. You can have a situation to actually, go through, inspect the house properly, negotiate for the right price.
So is it more of a buyer's market for those 500,000 plus homes?
I would say so. Yeah. I think,
Okay.
I mean, obviously the market was running rampant after COVID and the people said, oh, the prices dropped. They didn't really drop. They got corrected to what they should have been, right? It wasn't just, oh, the neighbor sold for $5, I'll sell for $5.25, right? It was now you actually have to sell what your house is for.
Yeah.
And I feel like that's been pretty stagnant. Maybe 3-4% every year if you're just leaving it alone, sitting it still. Yeah. So in comparison to 5 years ago, no, I don't think you're getting the best deal in the world. But in experience of what we've been dealing with the last 4 years, yeah, you're getting a bang for your buck now.
It was crazy. I think we bought our house. We're sitting on 4 years now.
Okay.
But everywhere we went, we were trying to live on one of the small lakes.
Yeah.
So like Lake Orion, different lakes like that. Oh. And I believe every house we bid on, we were outbid.
Yeah.
And I mean, drastically.
Yeah.
Wasn't even close.
When I bought my house, I think I made 47 offers without even seeing the houses. I'd see it on Zillow or whatever, and I'd say, okay, write the offer. The first time I seen my house was during the inspection.
Wow.
Yeah. So it was absolutely wild during COVID. You know, anybody, I give COVID a lot of my success because I was able to do so much business so young, and it doesn't take much skill to tell somebody, hey, your rate's 6%, we should refinance it to 2%, right? Mm-hmm. So I was running a team of probably 15 people underneath me, and each person was good for anywhere between 5 to 10 loans a month, right? So much experience pumping through so many different clients and ways to do the loans that I feel like that's what gave me my edge and why I'm still alive today. Because right now I try to train people and it's like, yeah, go out there and try to find a deal so I could teach you how to do it, you know, in comparison to where it's like you could have grabbed the yellow pages and called through there and found somebody to take a 2%, you know?
Absolutely. Refinance right away because the rates were so low.
Oh, yeah.
So if someone's sitting there today getting ready to potentially purchase a house, before they call you, what are some of the things that they should be doing to get prepared for so that it's not just, you know, that it's more of a warm transition into working with someone like yourself?
Yeah, I'd say just organize your transactions a little. I see a lot of people that, they kind of just play roulette with their cards when they go to the store and it's just, okay, I used that one last time, I'll use this one. And that causes problems for me because I have to look through, all of your documents. And if there's large deposits or money coming out of the accounts, I now have to track the flow of the money, right? So if you're 6 months out from purchasing a house and maybe you have some cash that you've been sitting because you don't trust the banks or you don't trust people, whoever it is, if you come and try to put that cash, into your account, while we're in the process, it's going to be disqualified, right? So maybe if you got any cash that you're going to want to use for the transaction, go and put it in the bank, right? Okay. Get your documents set up. We're going to be asking for 2 years pretty much every time. So what you have going on now and your last 2 years. So
2 years of income, 2 years of tax returns, stuff like that.
Exactly. Getting your W-2s ready. And then most of the time it's a crazy thing when I'm talking to people and I ask them, what do you want your payment to be? And they're like, I don't know. I feel like that's a conversation. Husbands and wives, so wherever it is, you should sit down and ask yourself, what do I feel comfortable paying every month, right? Because a lot of the times I can approve people for way more than they want to buy, right? And I'll hand them their pre-approval for an $800,000 house, and then they see the payment. They're like, no. I don't want anywhere near that, right?
Yeah.
So that's a big problem that I have is we'll have, hour-long conversations, setting up everything, and then I'll ask the question, well, where do you want to be? And they don't know, right? So just sitting down and figuring out,
creating a budget?
Creating a budget, going line by line and just saying, like, when I get this house, are there some things that I'm going to cut off, right? Am I going to stop purchasing these things, I ask people most of the time, the first thing I'll ask them is, how much money are you saving right now, right? How much money do you put into your account monthly? And if they tell me a number like $500 a month, right, but they've told me they want to buy a $600,000 house and their current rent's $2,000 a month, then I know there's going to be a shortfall, right? So there's some things that you're going to have to either get rid of or we're going to have to shrink your budget, right?
Absolutely.
So just knowing yourself, knowing what you want and what you're comfortable with is the most beneficial thing, because then when we talk and I try to advise and lead you down the right path, we already have the answers to the question. You could just say yes, no,
Sure. Well, just start thinking about the interest rate you have at 2.25%.
Yeah.
Or mine at roughly 2.75.
Yeah.
If we were to refinance that today, we might not be able to afford our house.
No.
Unless we have disposable income to add to that payment, because that payment's going to triple almost. It's nuts.
No, it's ridiculous. And I think that's one of the biggest issues is just affordability. And that's why you hear things in the news like, oh, they're trying to get a 50-year mortgage or a portable mortgage.
Oh, my goodness.
Awful.
Can you imagine a 50-year mortgage?
I did some of the calculations just thinking like, what would happen if this did happen? And, the interest rates, the bigger your term, the higher your interest rate, right? Mm-hmm. So now in comparison to a 30-year, if you're taking a 50-year, I told you the interest rates are averaging 6.5, you might be taking a 7 or a 7.5 to take it for 50 years. So if you do that calculation on like a $500,000 house, putting 5% down, it's like $150 savings a month to add 20 years to your payments.
Is that really going to come through? Is that what they're talking about?
Oh, okay. It was in the talks. Everyone was saying it was Trump. Yeah. Trump's going to do it. Oh, you're going to have this 40, 50-year mortgage. And it fizzled out. It doesn't make much sense to do it.
Yeah. I don't even know how someone could even potentially offer that to someone, right? Knowing the difference, like you said, $150 difference or whatever it is.
$150 to add 20 years and
that interest.
Right now, a general rule of thumb is that you're going to pay double for your house if you pay a 30-year mortgage, straight through, no extra payments, right? You buy a $500,000 house, 30 years, 6.5%, you're going to pay about $500,000 to $550,000 in interest over 30 years. So you buy your house twice. Imagine if it's a 50-year, you're looking at buying your house 3 times.
So if you're sitting in someone's shoes like mine,
yeah.
As an advisor, what would your advice be to someone who wants to pay that? Let's say they get a 30-year mortgage and they want to pay it off as quickly as possible. I know put as much as they possibly can on might be the advice you would give them, but you would also be thinking about the interest rate because if it's so low, why even put extra money on the mortgage, invest it in the stock market? Yeah. But like if someone is just sitting there and thinking, hey, I want to pay my house off as soon as possible, and they have this extra money, should they be doing an extra payment every year, 2 payments, or just putting it on each monthly payment?
So I would put one on each monthly payment because that's going to redo your principal, which is then going to recalculate what interest is due on the next one, right? Okay. So if you're going to save the money and then pay it at the end of the year, if you were to break that down into smaller pieces, and I know it's a drip in the pond, in retrospect, but I'd rather you pay it every month than pay it one time at the end of the year because that principal balance is going to go lower. So the interest charge is a little bit less. Okay, so that next payment will be a little bit more principal than interest,
Is there like a rule of thumb, though? Like 2 extra payments a year will pay your house off and
13 payments a year. And it depends on the size of the house and where the interest rates are at. Yeah. But if you make 13 payments instead of 12, it's supposed to cut it down under 25 years, between 23 and 25 years.
That's huge though.
Yeah. Just for one payment, it'll go a long way. Compound interest is insane, you know? It's we go through, it's called the amortization calculator is what I use. And anytime I'll close a client, I'll ask them, do you plan on rounding up? The payment's $1,750. Do you plan on rounding up to $1,800 when you make the payment? They tell me yes. I'll go through and I'll show them what that extra, $51 a month will do.
Might cut a year off the loan or whatever.
It cuts off more than you would think, than you would think over a 30-year period. Correct.
And that's part of financial planning as well.
Yeah.
I mean, you're helping them pay this house off a year sooner.
Yeah.
Maybe it allows them to retire a year sooner or whatever the case might be.
Well, can I ask you, are you in a rush to pay off your house?
Not at the rate it's at.
Right. Yep. So that like if you're trying to pay off a loan and you're at under 3%, then I would almost argue that's free money. Right.
Yeah, we start to get to that 6% range and someone's getting ready to retire. Then we're like, hey, you can make 8 or 9 or 10% or whatever. Yeah. Depending on the amount of risk that they're willing to take in retirement. But now that we're in retirement, are you willing to take that risk? Right. And so even like the S&P, right? It's been averaging 9% roughly for the last 40 years, but it doesn't mean every year it's 9%. So that's where we have to kind of look at it and then also see where we're at with the stock market, what's the interest rate environment. A lot of things come into play there than just having this one simple answer. Yeah. But you have to look at that whenever you're advising someone whether to pay that house off or not.
I do have another question for you. Yeah. Oftentimes people are worried about their debt to income, right? And they don't want to max their debt to income out. Yeah. What you as someone who digs through people's finances and helps them with their future, what do you believe a good percentage is for the debt to income? Where do you want your clients to be at?
I think it's a case-by-case basis. Depends on how long that debt's going to be there. Yeah. That depends if they have the income there to pay that debt off, or are they going to have to pull from different investments? Because if they have to pull from investments, is it coming from qualified money or non-qualified money? What's the tax implication? Right. How old are they at the time? Because now is it going to affect potentially taxes on Social Security. And I'm speaking to a lot of our clients are closer to retirement or in retirement.
Yeah.
So now we're affecting Social Security or Medicare Part B IRMAs because they're taking extra income out. So a lot of things come into play there. It just really depends on that particular situation.
Gotcha. So when I'm qualifying a loan,
Yep.
I take their gross pay, right?
Yep.
If you have a structured payment plan through, one of your brokerage accounts and you have a set amount of money coming each month, then I can qualify that. But in most cases, that's not how we're qualifying a loan, right? We're going off of your standard W-2 or we're going off of your tax returns, right?
So how about someone's retired? We should do both so our listeners could hear.
Yeah.
Because some people are sitting here today listening and they're retired, but they're thinking about buying a new home, over the next, let's say, couple of years.
So if you're retired, most people anyways are going to have Social Security and then some type of pension, right? Those I can use just with award letters, right? Okay. Depending on loan type, if it's a conventional loan, FHA loan, VA loan, they're going to have a different amount that I can actually gross them up by, right? So if it's a non-tax Social Security, then I can gross it up by 25% on, say, an FHA loan.
Sure.
And that can give me a little bit more income, right? If they have traditional accounts, 401ks, IRAs, right? Not a brokerage account, but like a traditional 401k or IRA that they are taking monthly payments out of. If I can divide that monthly payment from the balance in the account and have 36 months at least, then I can use it as income, right? So if, say, you have 10 grand in your account and you're getting $1,000 a month, then I'm not going to be able to use that as income because it's going to run out in 3 years, right? But for a lot of my retired clients, they bought their houses when they were still working, right? And they qualified for it without issue. And then they step into retirement and they've cleaned their lives up. They're low debt. They don't need the income anymore, right? So they live off their Social Security and their pension. And then they want to do something, whether it's pull equity out, buy a lake house, pull equity out, help their kids out, just get into a pickle. And then they can't qualify because their income's too low, right? And with everything they have. So a strategy that we use is going to 401ks or IRAs and setting up that distribution plan, figuring out the calculation that's going to land us at 36 months just to give them that extra income so that they can close.
Now, do you have to see like certain months, like 3 months of this income coming out, or just like a letter from the advisor or from, let's say, the institution holding the money?
Yeah, just a letter from the institution. Yeah, you could set it up right then and there while we're in the process for short. If it's already set up and we're just proving it, then everything we ask for banking wise is going to be 60 days back, right?
Okay.
So 2 most recent statements from the account and then a bank statement from the account that it's going into, right? So 2 months from the brokerage account and then a month from the actual account that you're receiving those funds to.
That makes sense.
Yeah.
Now, here we believe we have one of our patents off of our philosophy, which is we believe like 5 different distinct plans everyone should have. And we call it our strategic wealth method.
Okay.
So number 1 would be the income world, making sure that they have the proper income. So how does a mortgage impact someone's monthly income flexibility long term?
So I rephrase the question.
Yeah. Well, how does a mortgage impact someone's monthly income flexibility long term? And I think you kind of answered that. You just want to make sure that they aren't putting too much allocated towards this monthly payment. That
we're not going to allow you to. We're not going to allow you to, right? There's restrictions on debt to income, right? So a good general rule of thumb is about 50% of your gross income is what you're going to be able to use towards your mortgage, right?
All right.
So if you make $10,000 a month, then we're able to use your maximum payments are going to be about $5,000. So with any other debts you have, credit cards, personal loans, student loans, and then that mortgage has to fit within that $5,000, right?
That makes sense.
Yeah, go ahead.
So when does it, in the investment world, when does it make sense to leverage debt instead of paying cash?
I mean, not a lot of people have the cash. I know there
Probably
are people out there in the world that have it, right? But majority of the time, you would call it a good debt, right? It's asset backed, right? And you're making good cash flow. I wouldn't go into a property where your payment's going to be $1,000 and it rents for $1,000, right? Because even though the mortgage is covered, you still have maintenance that you need to do to the property. Things happen. If you want to pay a property management company, that's going to cost you money. So you need to have, I'd say, depending on the size of the house and where it's at, how much money you have invested, you need to probably make about 15 to 23%
off of that investment property.
Of that investment, yeah, in order for it to make sense.
Okay. Now the next world, we call it, is our tax world. Are there tax advantages people overlook when real estate lending?
Yeah. So every year your mortgage company will send you a 1098 statement, which is just breaking down how much interest you spent for that year. Interest on a mortgage is tax deductible, right? So you might be able to see a little bit more money on your monthly check after you buy a house because you can now write off that interest that you didn't have previously. I do believe property taxes are tax deductible as well. Yeah.
And then we go into the legacy world, which is more estate as well as legacy. People are trying to create a legacy.
Yeah.
How can real estate financing play into building generational wealth? So someone who wants to look at that as passing that maybe down to the kids.
Yeah. I know a lot of my friends' dads, now that we're all a little bit older, in order for them to go to college, their dads bought them a house when they were born, right? So as soon as the kid was born, they bought the house and they had a renter in it for 18 years. And then when the kid turned 18, they give them the option to sell the property to go ahead and pay for college, what they need to do, or take the monthly income from it, right? Yeah. So it's something I'm going to do for my kids, right? Okay. Where it's buy this house real estate's pretty repetitive. Over an 18-year cycle, it's very hard to lose on a real estate deal, right? So no matter what the market's at, if you give something 18 years, it'll most likely recover and past, right? So that's one thing I see that I love when I see parents do that for their kids. The second thing is buying a new primary residence every 2 years, right? Because you live in a primary residence for 2 years, you avoid the short-term capital gains tax, right? So you either are buying this house and then selling it, taking that equity and buying the next property, or you're leaving that one as a rental property, right? And you're taking advantage of the fact that maybe you put a little bit less down on it, because on an investment property, you have to put down 20%, and most, primary residents, you can go between 3 to 5% as a minimum down payment. So you can use low funds, low cash out of pocket to continuously roll over into new primary residents every 2 years, and then leave those houses rented out because you lived in them for 2 years, you bought them as primary, you got a better rate on it. You should be able to cash flow on it after a 2-year cycle, right?
Do you guys see a lot of like people doing 721s or 1031 exchanges when it comes towards like rental properties?
Oh yeah. All the time. And usually it's from people that are actually out of state. As of most recently, it's been people that are selling places in California and moving their stuff over to Michigan, right?
Yeah.
And also, I'm licensed in 33 states to do the business.
I was going to ask that later on. Yes.
Yeah, I have the company right now, I believe, is in 12 states operating. Okay. So we're a little bit more, not everything is happening in the Michigan market for us, right?
So because we have clients throughout the country, I think we're in about 17 states ourselves.
Sweet.
So if that's the case, one of our clients are listening in another state, chances are you could potentially still help them out.
Oh yeah.
Just got to give you a call.
Oh yeah. I could turn it on in a month too if it's a state that I'm not licensed. In. Yeah, I've already have all the licensing, the test pass, so it's just a pay to play.
Okay. Oh. Now, when you were talking about earlier about the down payment that someone has to have, let's say it's 20%.
Yeah.
What is it for like jumbo loan?
Jumbo loan, it's really going to be dependent on credit.
Okay.
Because at 660 is going to be generally the minimum credit. And if it's lower than that, I would argue you shouldn't be buying a $1.5 million house.
Absolutely.
But you can get them as low as 10%. And there are some institutions that'll do them at 5%. It's just, as I was saying earlier, the less you put down, especially in loans like that, which would be considered like a non-QM space, they're going to jack the interest rate up on you. So what you can do all the time is not always what you should do, right? Because if you're putting 5% down and then they're going to charge you 2 or 3% in fees, I'd rather you put down the 10%, pay a 2% extra, but it'd actually go towards your principal.
Makes a lot of sense, yeah.
Yeah.
And when you say do the right thing, a lot of times we're wanting, and this is what at least I'm finding out, so my kids, they're doing a good job of this, but I see a lot of 20-year-olds wanting what mom and dad have today when it comes towards a house. So they want that $1 million house today. They don't realize it took mom or dad 2, 3, 4, 5 houses to get there.
Yeah.
Do you ever have to have a lot of tough conversations?
Oh, yeah.
With people like, no, this isn't right, or you're overbuying, or whatever it might be?
I have a lot of humbling conversations. Yeah. And just as I explained to you earlier in the podcast, when I was 19 years old making $200K a year, no one could tell me anything, right? I was the shit. I was the richest person in the world, right?
Yep.
And then I go to sit down, and even for myself, it happened to me when I was young, 19, and I tried to go buy a house. They're like, Emilio, you don't qualify. This is your first year of commission-based income. I'm like, what do you mean? Like, I got all this money.
$200,000.
Yeah, I made $200,000. What do you mean I can't buy a house, right? That's the conversation I have with often a lot of young kids, because there are ones that end up doing really well at 20, right? And they start making a ton of money, but it doesn't correlate into being able to go buy $1 million house, right? So I'd say that the young kids, the biggest problem is saving money because everything is so expensive right now, right? So if you have great parents and they take care of you and they pay, your car payment and you have food on the table and you're able to save, I'm not having as many tough conversations with those kids because they have, a little war chest of money sitting up. But the kids that are, out making it on their own, they have the income, but they don't always have the savings, right?
So are you saying to those kids where their parents are still paying their car insurance and their cell phone, don't rock the boat?
Yeah.
Let them do that, right?
I'm like, dude, I'll be honest with you. I'd stay at home as long as you can.
You ain't kidding.
Yes.
We have people that we've seen, and clients, of course, where their kids, maybe it's Chicago, very expensive out there.
Yeah.
And then having to move back in because they can't afford, whether it's rent or their house payment. And they're giving them that opportunity to move back in and save the money so that they can go back out and afford it, maybe a year or 2 years later.
Being financially gridlocked young is like no direction to go. If you get yourself trapped where you go out and buy too expensive of a house and then you start not to like your job, right? And you want to make a career change, but you're a check away from not being able to pay the bills, you get stuck, right? Yeah. And you can't make the moves you want to move. So having parents to be able to fall back on to say, Mom, Dad, I kind of want to retry my life. I want to go in a different direction. It's a huge thing. It helps a lot.
Job market today.
Ridiculous.
It's hard to find a job. How many people do you actually know that went through college and got their degree and it's actually working in that field? Very few that I actually talk to.
No, I'd say less than 80%.
Yeah.
Yeah. Or not less than 80%. 80% of people are not working.
Yeah, that's what I was going to say.
Yeah. Nobody that I know personally are actually working in their careers that they went, whether it's a business degree or, it's just
finance degree, anything, whatever it is. Oh. All right, I've got a few rapid fire here for you. And this would be a little fun, but fixed rate or adjustable?
Most cases fixed, but there are great scenarios where adjustables make sense, right? I have a client right now I'm dealing with that is going into her residency, right? She's going to be in Michigan for 4 years, maybe 5. But while she's looking for jobs, she's going to be getting out of here, right? So she knows it's 100% guarantee we are selling the house, right? Okay. So a 7-year ARM where I give you 2 years just in case things were to happen, but you get 1% lower, better on the rate, that ARM's going to make a lot more sense. I would call that a calculated risk, right?
So it just depends.
Yeah, it's really dependent.
All right. How about payout? Well, we kind of already said this, but pay off mortgage early or invest the difference?
All about the rate. Yeah.
Biggest red flag in a borrower?
I'd say just not like telling me missing deadlines, right? I request documents. You say that you're going to get it to me tomorrow, and then you go 2-3 days without sending it to me. It usually seems to me that either you didn't tell me the truth, right? And you're afraid that I'm going to be looking at your W-2s now and see the reality of it. And then credit, a lot of people will tell me, oh yeah, my credit's 700. I pull it, it's 500. And it's like, red flag. It's not going to work.
No doubt about it. Or a procrastinator or whatever.
Yes.
Do you walk away from people?
Yes. Good. Yeah, absolutely. Yeah. I don't want whether you're trying to help somebody or not, you have to be careful who you help. Some people won't be grateful for it, right? And I might go through a process that other people wouldn't be able to get done. And it might take me 60 days. And then you go leave a review on my page saying, oh, it took him 60 days. He was missing deadlines. I had to extend my contract 3 times. And it's not my fault. It was your fault. Yeah. And you're lucky that I tried to help you, So
sure.
I have a system of 1 through 10, right? And a people scale, right? Say you're a 10, right? You own a company, you do very well for yourself. Say I'm a 6, right? I'm a young man heading on the direction. I know 5s and 7s, right? You know 9s because you're already a 10, right? But if you're out knowing you're helping a 2, the 2s know 1s and 3s, right? So you're going to be careful with who you're helping because now you might bog your business down with people that are not your ideal client.
Absolutely.
Right? So yes, I do walk away.
Yeah. And I think that's smart too, because you can't care more than they do.
Yeah.
And we tell people all the time, like, listen, we'd love to help you out. First, we have to make sure it's a culture fit for us.
Of course.
Culture fit for our swag family, which would be our client family.
Yeah.
I can't take our team away from helping our existing clients to potentially help a prospect if they're not going to put the time and effort in or care as much as us. And if someone is screwing around and causing delays on your end, it just doesn't make sense to work with that person, no matter how much money they have.
I won't chase.
Yeah.
I'm not a chaser. I set an expectation, and I always, every time I end a phone call, there's already in the books when we're jumping on the next call. Yeah. If you miss that call, you won't get a second, right? You'll get a text from me saying, hey, you missed the meeting. Give me a call or shoot me a text if you want to start moving forward again. But I'm not calling you every day now until you answer.
Good for you.
Right?
Something that you learn early on in business as a 25-year-old, where most people probably don't learn that until they're 30. So that's a good thing.
My fiance actually taught it to me. My fiance is, she's the labor horse behind it. I cause the problems, she solves the problems for me. And I was bringing her deals and racking my brain trying to get them done. And she's like, Emilio, you can go get 50, 60 clients. You're sitting here bogging yourself down trying to figure this out. And she took a deal for me. She ripped it up and threw it in the garbage. She said, stop it. And that day I went out and got 3 new deals. I'm like, man, I need to stay more front focused, right? And even if it's someone that I might not want to help, I know a lot of people in the business that would love the opportunity. So I might not want to do it, but I have XYZ that I trust that I would love if you had a conversation with them. It's a second half of myself, just though they're able to give you the energy and the attention that you need. Right?
Absolutely. There's a right fit for everyone and a wrong fit.
Yeah.
But you're still helping them out by sending them to the right person who's going to be able to help them out. Might not be you, but that's okay. Yeah. I think with sales in general, whether it's mortgages, whether it's picking up new clients in the financial field or anything else, I think that's one of the things that we early on in our careers, we tend to hold on to that person. Like, I could still get them to understand what I'm trying to do, or I could still get them to commit, or I could still get them to do this business.
Something I learned young, especially while having a team of 10 guys and we're all calling the same lead list, is me and you can be in the same business and call the same 100 leads. We're going to walk away with different clients, right? Some people are going to connect with me really well. Some people are going to connect with you really well. It doesn't mean that I'm doing anything wrong, nor does it mean you're doing anything wrong. It's just not everybody connects with each other.
No, you're right. And it's crazy because in this business, I've got 2 of my good friends. Their offices are within a mile of here, probably even closer, about a half to 3/4 of a mile. And we still get together and we have like a think tank where we sit down and have conversations with each other about what's working, what's not, how we're picking up new clients or different marketing aspects of it.
Right.
And we've never worried about that because we don't run into each other, because of the same thing. We're going to attract different people that are going to that want to do business with me that might not want to do business with the other person, or vice versa. And there's nothing wrong with that.
Nothing wrong with it. I help a lot of loan officers that don't work for me, work for different companies. And everyone's like, why are you wasting your time? You're helping him make money. Well, I get referrals from these people too, right? They might sit down and say, Emilio, this deal is super complicated. I have other clients I need to deal with. Can you take care of this guy? I don't want to ruin it, right? So I believe there's more money in the world for everybody. We're not stepping on each other's toes.
What goes around comes around.
Help
if you're
people
confident
out,
and you're doing the right thing, it comes back around.
100%, it always has.
All right. How about best financial habit homeowners should have?
I would say I see a lot of people put their checks in like envelopes, right? And kind of break down, okay, this is going here, right? This is for pleasure. This is for food. I think that's a great habit to have, just knowing where your money goes, right? There's so many times I go through people's bank statements and I'm like, man, you ordered DoorDash a lot. No, once or twice. No, it was 15 times last month, right? It's a lot of money. And people don't know where their money goes. They make their check and then they just open and load up their bank account and they're like, okay, I have $600 now to spend. Okay, now I have $400 to spend. Yeah. And it's just, you run out of money at the end of the month. I don't know what happens. I'm not that person, but I can imagine it's got to be pretty crazy sitting there thinking, I don't have my paycheck for another 6 days and I'm out of money.
That's got to be crazy. Right? And we see that all the time on our side. Someone will sit down with us on that first meeting and tell us that their expenses are $5,000 or $10,000, whatever it might be.
Yeah.
And then as we build that plan out, of course, we want to see their bank statements or we give them a budget.
Yeah.
And I want to see exactly what it is. And usually it's about $1,500 to $2,000 more than what they actually think they're spending.
Right.
And then when they look through there, they're thinking to themselves like, do we really spend this?
Yeah.
Holy cow. Like you said, DoorDash. We spent $1,000 on DoorDash last month.
Yeah. I think a big problem is people are more reactive than proactive, right?
Oh, no
so
doubt.
they don't know to do anything, or they don't stay organized until things happen to them. And then they sit there, and now instead of just making a decision, you're stressed out trying to figure out what the hell just happened, right? So big thing for financial habits is just knowing where your money's going and knowing what expenses you have coming up, right? Sit down and talk to your significant other, or just go through your account and say, oh, we have to renew our tabs in 3 months. That's $200 that we weren't anticipating to spend, right?
Yeah. Well, where do you see the lending world going in the next 3 to 5 years?
I think a lot of the stuff is going to go to financial tech, right? Like think of like Credit Karma, right? Where you can go in there and it'll tell you 30 credit cards you can get. You click a button and then next, you got a credit card in the mail. I think a lot of it's going to go to that, into the financial tech, where it's, you're going to go into a database and you're going to be able to upload your W-2s and upload your pay stubs and get a pre-approval within as fast as the computer can load, right? And I think that'll happen for the better clients first, your high W-2 earners with no debt, very good credit. I think they will have the option to do that first. And then as it gets better throughout the next 5-10 years, I think they'll be able to start handling a little bit of harder deals. I think my generation will be a lot more receptive to the AI and be a little bit more trusting of it. I don't think your generation will be. And I have that with the new car insurance, right? Where, you can go in here and type in all your own information. My little brother just bought a car and he's like, I don't want to go through your guy. I'm going to go, type all this stuff out. And next thing you know, he's on the phone with me. He's like, what is this? And what is this? I don't know what to type into here, right? So I think that it'll be a little bit of a gap for the next 10 years where I still have a job, right? Because people still want the personal touch. But I think towards the end of that 10 years that I could be pretty phased out.
That's what I was going to ask. Do you see yourself transitioning into online, like 365, transitioning to some type of online?
We do a lot of online, but I think that what I'm doing online right now is kind of training my person that's going to replace me, right? Because it's following my task, it's seeing how I operate, it's seeing what I type into there, and it's just collecting all of that data. So I will go online, but me going online will just better my odds of being replaced, right? Because it's going to mimic me, right?
Yeah, and it's hard because a lot of people still like that face-to-face or talking to someone instead of talking. And AI is just going to get better. I mean, you go on AI right now and you don't even know if you're talking to a person or if it's AI anyways.
No, not at all.
Which is kind of crazy.
Yeah.
And we noticed that through COVID. We probably had gone from doing, maybe 2 to 3 in-person workshops or seminars every single week for the most part.
Yeah.
To picking up business with people I've never met in my life across the country and doing just an online presentation.
Yeah.
And people that were moving $2, $3, $4, $5 million without ever meeting someone in person. And it's crazy because when I was growing up, when I was 25, you've heard all those guys, the old guys saying when I was 25, well, when I was 25, it was always a handshake. No one's ever going to do business. And prior to COVID, for the most part, that's how it was.
Yeah.
And then as we transition into COVID, there are sometimes when we go back to some of our other states and we'll do like a client appreciation experience. And I'll have to ask like the office, like print off pictures from their driver's license so I can remember, because I've never met these people other than a Zoom meeting.
Right.
So when you finally go to see them in person, you're like, oh my God, I've never met these people. They've been clients for 5 years and I've never met them. Yeah.
Well, that was the reason why I got into mortgages over real estate. I wanted to do real estate right out of high school. I loved the idea of it. But then I don't want to go sell $100,000 houses. I want to go sell $700,000, $800,000 houses. And who's going to trust my little, this little 18-year-old fresh out of high school doesn't have a house himself, doesn't know anything. So with mortgages, I could hide behind the phone, right? So I loved actually everything that like you're saying, like I'm very used to a firm handshake. I've learned to do the business where you don't meet me, right? You don't see a picture of me. You just know the guy that called you and is giving you a good deal, right? So it was very foreign to me to be able to talk to people over the phone and even get their social security number, right? Yep. I remember the first time I was told, you got to call them and get their social security number so you get their credit. I'm like, I wouldn't give you my personal information over the phone, 0%. Like, how do you expect me to do this impossible task? And they're like,
now it's normal.
This whole office is built off of that, Emilio. Like, it's like, don't make it more than it is. Trust me, they'll give it to you. And that's like, that's where the world's heading.
Well, it has to do with trust too, right? Because they have that person sitting across from you, whether it's in person or not, or that person across the phone from you has to believe that you're the right person for them. And that's because you do a good job of helping them feel comfortable and, they're accepting that you're a good person on the other end.
Yeah, I would argue that it's a little bit harder to do a deal over the phone. And, in
I would
person,
agree.
You could see me, shake my hand, I'm real. Over the phone, I have to be a little bit more able to earn your trust and describe things without looking you in your eyes and
I'd say
seeing.
it's a lot harder.
Yeah, 100%.
Now, if interest rates drop tomorrow, what should people not rush out to do?
Refinance. Yeah, I mean, if they're dropping tomorrow and we've been trending up and stagnant, you would think that they're going to be trending down now, right? If we start taking that break. So refinancing's not free. Everyone will tell you, oh, it's free. It's no cost to you, but they add that money into your balance, right? So you're financing more. So it's not free. It never will be free, right? And if the market's going to continue to go down, you're paying a good chunk of money for a rate that you might want to refinance again, right? So I wouldn't knee-jerk reaction where you take the first rate that's offered to you that's 1% lower than where you're currently at. I would pay attention to the market, maybe contact someone like myself, someone like yourself, and get a pulse, an idea of where the market's heading. Because if we're trending down and you can wait 6 months and you can get yourself a better deal and only have to do that refinance once, you're gonna thank yourself long term.
So I'm guessing if they call you, you could do like a side-by-side comparison. Pros, cons, just hold off for a little bit.
Yeah. I mean, I tell them now you're on the radar, right? I know you want to do it. We know that it's eligible, right? And let's pay attention to it and let's talk about where we want to be. So I'll get an idea rate and then I'll watch it for you. And if I can see that rate become eligible, I'll go in there and lock it and then call you and say, hey, congratulations, we got the rate,
Okay. So people are listening today. They're sitting here thinking, this is something that I probably should contact Emilio. What's the first step for them to do?
Well, I can give a business card with my contact information.
Yeah, and if you want to give phone number or how they could contact you as well.
586-272-5012. That's a direct cell. It's an iPhone I keep in my pocket.
All right, good. So, and what's going to happen when they reach out to you? What can they expect?
It depends if they're calling me or they're texting me. They can expect for us to schedule a time to sit down with each other and get familiar, right? I don't work for one specific bank. I'm a broker, right? So it's really important that I understand what's important for you and I step into your shoes to see what your 5-10-year plan is so that I can advise correctly, right? So my first conversation is always going to be getting to know the person, understanding what their next 10 years looks like. And then that will give me all the information I need so that I can request the proper documentation and set an expectation, right? I could usually get a pre-approval done unless you're a guy that owns 10 businesses, you have K-1s flying around everywhere. That might take me a little bit longer. But if you're just a standard W-2 salary employee, I can get a pre-approval done in 30 minutes and you can be out shopping. Yeah.
So there's no one size fits all or just one mortgage lender for every single person that comes through the door. So it's kind of like tailoring it around what their goals and their expectations are for the next, like you said, 10 years. Yeah.
Well, you can keep it competitive, right? Because if I have 20 people, 20 different institutions that want the business, then I can kind of make these guys fight for it a little bit to drive that price down. Yeah. So
that makes a lot of sense.
Not one lender that you go to. There's a plethora.
And I know you kind of mentioned this earlier, but I want to make sure people listening today, they know exactly who that person is or if they're that person that should be calling you. So ideal client, ideal person out there that should be contacting you. Who is that person?
I'd say the ideal client is going to be just a residential, primary purchase. I know I do really well on that. The pricing is super aggressive. And I know I can get it done at a fair price and very quickly. Physician loans are starting to get a lot more popular. I'm doing really well on those. And just, people that are ready to go, right? People that are ready to go and they want to be educated. I'm a big educator. If you just want to call me and just get a rate and get off the phone, then call somebody else. I want to sit down and actually get to know you.
Makes a lot of sense. Your time's valuable.
Yeah.
But you do commercial as well.
Yes. Okay. Just the ideal wise, the residential, like I mentioned to you earlier, scratches a good itch for me, right? Yeah. Because I feel a lot better about putting people into. That's who you enjoy working with. 100%. Nothing wrong with that. 100%.
Now, this is called the Live Your Best Life podcast.
Yeah.
And everyone's vision of what living their best life is different.
Yeah.
What does live your best life mean to you?
My definition of living my best life, like for my definition of wealth would be comfort, right? So living my best life is not, looking over my shoulder, not worrying about the bills, not, reading the prices at the grocery stores. That's a big portion of living my best life. If I can do all of those things, then I'm a pretty happy guy. On the outside of that, I like to golf, right? I'm a big golfer. So anytime I have, whether it's to play 9 holes, I'll work all day, get off at 6, especially in the summer in Michigan. We get to have the sun until about 8:30.
Yes.
I'll get out there, go have some fun. And just, we go up north a lot, right? I love to be on the water, and I like to be outside.
Yeah. Nothing wrong with being outside, especially Michigan for 8 or 9 months out of the year. It's one of the best places to be.
Oh yeah. There's nothing like a Michigan summer.
Now you will have to talk to Enzo before you leave, because we do have a golf outing.
I'll be there.
It supports charity.
Okay.
And might even be an opportunity for 365 to be able to market as well to some of the people that'll be a part of the fundraiser. So It's a fundraiser that we use. All proceeds go to help families out in need. We look for, whether it's military veterans, whether it's people going through cancer, or just anyone that's down and out, kind of needs a helping hand up, not a helping hand out.
Yeah,
I like to say. And then we cover 6 months worth of their mortgage, and just really help them get back on their feet to where, if we're covering 6 months worth of their mortgage, hopefully they're heading in the right direction,
right.
And usually we cover several families every year. And I think this year we'll be able to probably help out about 3 to maybe 5 families. So we're very excited about it, because we've got a good sponsorship with a local person. I won't say the name yet, because I'm not sure if we can say the name yet, but very excited about that. So this year we're looking to raise quite a bit of money, and we open it up to our clients as well as our client families and their friends. So love to have you out if you want to, especially since you like golf. And I think
I'd love to.
Yeah, it'd be a great time. Yeah. Well, appreciate you being on the podcast today. You want to repeat your phone number again, just for people out there?
Yeah. Emilio Torres, 365 Lending, 586-272-5012.
And email, or not email, but website?
Website's going to be 365-lending.com.
365-lending.com.
Yes, sir.
Appreciate you being on the podcast today. Guys, if you're listening out there and you have any questions or any needs when it comes towards lending, financing, reach out to Emilio, and he'll definitely take care of you. We've gotten a chance to know you a little bit over the last couple of years. Both Christina and Emily, which you guys have gotten to know as well over the past couple of years. You guys know them. Good family. That's their brother, basically. So reach out to them if you can. Appreciate you guys listening to today's podcast. Looking forward to next week's podcast. And you guys take care and have a great weekend. Thanks for tuning in. If this episode sparked something in you or made you realize it's time to stop guessing and start planning, we'd love to meet with you. No matter where you are, no matter when you start, you deserve to live your best life. We'd love for you to like, subscribe, and share this podcast with your friends and your family. Remember, living your best life isn't a destination, it's a decision. And it's a decision that you get to choose. Until next time, stay well, stay informed, and keep living boldly.
Investment advisory services offered through Strategic Wealth Advisors Group, Incorporated, a Securities and Exchange Commission registered investment advisor. Content contained herein is for informational purpose only and is not intended and should not be construed as personalized investment advice or an offer for the purchase or sale of any security, insurance, or other investment product. Investments involve the risk of loss, including possible loss of principal. Please consult with a qualified financial, tax, accounting, or legal professional before implementing any ideas or strategies discussed here. Content provided may be obtained from sources believed to be reliable, but cannot be guaranteed as to its accuracy or completeness.